AeroVironment just delivered the kind of earnings report that can completely change how Wall Street values a company. Revenue surged 133%, earnings crushed expectations, backlog climbed to roughly $1.2 billion, and investors responded by sending AVAV sharply higher. But the biggest story isn't simply that the company beat estimates, it's what these results say about the future of defense. Governments around the world are no longer experimenting with drones, autonomous weapons, counter-drone systems, and directed energy technology. They are placing real orders, increasing military budgets, and preparing for a very different type of battlefield. AeroVironment now sits right in the middle of that transformation. The earnings numbers explain why investors got excited so quickly. Quarterly revenue reached $641.6 million compared to $275.1 million a year ago, beating analyst expectations by more than $85 million. Adjusted earnings also came in well ahead of forecasts, while adjusted EBITDA more than doubled to roughly $140 million. This wasn't a small accounting surprise or a one-time event. AeroVironment sold significantly more defense technology, improved profitability, and showed that the business is becoming much larger than many investors realized. One reason for that growth is the BlueHalo acquisition. BlueHalo and another acquisition added roughly $282 million in revenue during the quarter. But the impressive part is that AeroVironment still delivered approximately 31% organic growth. That tells investors demand was already accelerating before acquisitions are even fully reflected in the business. Instead of simply becoming a larger drone manufacturer, AeroVironment is transforming into a diversified defense technology company. The company now operates across military drones, loitering munitions, counter-drone systems, cybersecurity, space technology, and directed energy weapons. That diversification makes the business much more resilient because growth no longer depends on a single product or one government program. One of the biggest additions from BlueHalo is its counter-drone technology. Modern conflicts have demonstrated that inexpensive drones can cause enormous damage, forcing militaries to rethink how they defend troops, bases, and critical infrastructure. That has created a rapidly growing market not only for offensive drone systems, but also for technologies capable of detecting and neutralizing hostile drones. AeroVironment now has exposure to both sides of that equation. The company also gained high-energy laser technology through BlueHalo, giving it exposure to what many believe could become one of the next major defense markets. Laser systems have the potential to eliminate repeated drone threats at a much lower cost than firing traditional interceptor missiles every time a target appears. The technology is still developing, but it represents another long-term opportunity beyond the company's existing drone business. Perhaps the most important number in the entire earnings report wasn't revenue or earnings at all. It was backlog. AeroVironment finished the fiscal year with approximately $1.2 billion in funded backlog, compared to around $727 million 1 year earlier. Full-year bookings reached roughly $2.7 billion, while the company reported a book-to-bill ratio of 1.4. That means new orders are arriving faster than the company can currently recognize revenue, giving investors strong visibility into future growth. And the broader industry helps explain why. Recent conflicts have shown just how quickly drones can reshape the battlefield. Governments worldwide are increasing spending on autonomous systems, loitering munitions, and counter-drone defenses to avoid falling behind in future conflicts. AeroVironment already supplies products that have been used in real military operations, giving it credibility that many younger defense companies still need to earn. Of course, investors shouldn't ignore the risks. AV surged more than 20% after earnings before giving back part of those gains during the session. That doesn't necessarily signal weak fundamentals. It's common to see profit-taking after such a large move, especially when expectations quickly become much higher. Management also guided for slower growth next year than this quarter's headline numbers might suggest. That's largely because last year's comparisons benefited from the BlueHalo acquisition. making future growth rates naturally lower. At the same time, the company continues investing aggressively in manufacturing capacity, research and production to support future demand. Those investments could create much larger opportunities later, but they also mean investors should expect volatility along the way. Government contracts rarely arrive on a perfectly smooth schedule, and defense companies often experience uneven quarterly results even when long-term demand remains strong. That means short-term fluctuations shouldn't necessarily be confused with changes in the underlying business. Still, the long-term investment case is becoming increasingly difficult to ignore. AeroVironment now has exposure to several of the fastest-growing priorities in global defense spending. Military drones are becoming essential, counter-drone systems are becoming necessary, directed energy weapons continue attracting attention, and space communications and cybersecurity are becoming increasingly important as warfare evolves. The company no longer depends on a single product to drive growth. It has multiple businesses benefiting from the same long-term trend. The next major catalyst comes on July 8th during AeroVironment's Investor Day. Management is expected to provide more detail about long-term growth plans, Blue Halo integration, production expansion, and the size of future opportunities in counter-drone systems and laser technology. That event could give investors a much clearer picture of how large the combined company may eventually become. So, is AVAV exploding because of one unusually strong earnings report, or is Wall Street finally beginning to recognize a much bigger transformation? Right now, the evidence points toward the second possibility. Before we continue, if you've been following this channel, you know I don't waste your time with hype or guesswork. I focus on research, real insights, and tools that can actually help investors. That's why I've partnered with The Motley Fool, one of the most trusted names in the investing world for over 20 years. You'll find my link in the description. Is the easiest way to check them out and see what they offer. That link also gives you access to special deals or discounts they have available right now. And yes, it helps support the channel too. Now let's get back to the video. Revenue surged to $641.6 million. Earnings comfortably beat expectations. Organic growth remained above 30%. Backlog climbed to approximately $1.2 billion. And Blue Halo transformed AeroVironment from a leading drone manufacturer into a much broader defense technology company with exposure to several of the fastest growing segments in military spending. The drone boom is becoming very real, but this story is no longer just about drones. It's about the entire future of modern warfare. If management continues executing, converts backlog into revenue, and successfully scales its expanded business, today's earnings rally may end up being remembered as the moment Wall Street finally realized AeroVironment had become far more than just another defense contractor. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.